The Rebel Capitalist Show. All right, guys, it gives me a great deal of pleasure to welcome someone to the Rebel Capitalist Show. At least someone or something. Maybe a green chicken by the name of Doomberg. Doomberg, welcome to the Rebel Capitalist Show, my friend.
George, it's an incredible honor to be on your show. Big fan of yours. And we were talking before we joined the call, but you're an inspiration for us and the things we're doing, and really admired as you build out your franchise and trying our best to learn all the lessons that we can by observing you and a few others in the field. And so it's really a special honor to be on your show, and I couldn't be more grateful for the invitation.
Well, you guys have really been creating some incredible content, and you've gained a huge following on Twitter and your blog. Can you kind of just, for my viewers who aren't familiar with what you've been doing, can you kind of walk us through that?
You bet. We're pretty passionate market observers like you. We're interested in current events. We happen to run a business that allows us to stay current as part of what we do and what we offer our clients. And so we're really market observers with more of a science technology bend, and combine that with some pretty deep financial knowledge on our team. And so we're just writing about current events, what's in the news, giving our take. And like you, if I had to sort of describe the George Gammon brand, is you're really good at, distilling complex financial topics for the, sort of a wide audience. And we try to do the same thing with more technical science, energy, nuclear policy. But we do write a little bit about crypto, whatever interests us. We're very passionate about writing and data and photoshopping. We mix in a lot of humor. And we really watch the growth of Substack as a platform. Our mutual friend, Chris Irons, has started a new platform over there, which is great. And we're loyal subscribers to his work. And, this whole gig economy for brains is just exploding. And I think COVID has accelerated that. And the way people consume information is changing. And the word I would use is it's curated. And so you can curate an enormous amount of inflow in just the way you like it, in the doses that you enjoy, from the sources that you've come to respect and admire. And so that's basically what we're trying to do on the Substack platform. Substack's a great platform. We really love the Substack team. And you're correct in that we've experienced really a surprising amount of growth, far exceeding our expectations. And we're really having a blast. And one of the pieces we write every month is called The Work of Our Life, where we're just totally authentic with our audience about just how much fun we're having. We share our analytics, what worked, what didn't work, and what our plans are for the future. And it's been really a ton of fun.
So why did you choose Substack for this instead of creating your own blog? Let's kind of go down the entrepreneurial path for a moment. Or maybe better said, why did you choose to put all your eggs in that one basket?
That was great. Yeah.
I know everyone was waiting for that joke. I had to say it. I'm sorry.
You're nothing if not quick on your feet, George. So we decided to go with Substack for a lot of sound reasons. And look, we did a full survey of content creators in the financial space, you included. What do they offer? How do they offer it? What do they charge? How big is their audience? And one of our good friends is Grant Williams, and he runs his own website. We decided to go with Substack for two main reasons. First, we didn't have a pre-existing audience, and Substack is trying to, and I think hopefully will be successful in building that critical mass of people in their community. They already have their credit cards on file. It's easy to buy. People go to Substack and they know the deal. It's either a free blog or they pay, or it's somewhere in between. There's no offense taken when you go behind a paywall. People know what they're getting when they go there. And there's thousands and thousands and thousands and thousands of people on Substack for whom it is very easy to buy your content if you can earn their business.
I see. And I didn't even know that the platform worked that way.
That's their whole essence. And Substack, if you do go behind a paywall, Substack takes their share. It's a 10% cut. And so Substack has an entire team dedicated to supporting authors as they try to build their audience. So we have a direct connection to Substack. They've seen the growth of Doomberg. They've reached out. We've developed a relationship. We've helped bring a few other people to the platform. It's sort of like YouTube, but instead of ads, you have this easy way to monetize your content if you get big enough. And And so that's one. And the second is since we didn't have that pre-existing following, it's a really simple platform to create and express a totally new brand, which we've done with the green chicken. And so people laugh at the chicken. We include a lot of Photoshop of the chicken in the flows of our pieces. But in reality, the first rule of branding, which, as you know, is people can't remember you if you don't stand out. And so you have to stand out. It has to be unique. And we really love the green chicken. One of my partners in my sort of day job business designed it and actually came up with the name Doomberg, which we love. It's just a great name.
It is.
And yeah, we have a lot of fun with it. You know, if you read our pieces over at doomberg.substack.com, you'll see that we mix in a lot of humor. We don't take ourselves too seriously. The intent of our work is that we should be funny without being silly. We should teach, without being too self-indulgent. And everything should be crisp. It should be clean. The writing is tight. We really love the writing. We, like you, we try to produce a great product, and we interact with our readers. And so Substack as a platform is gaining critical mass in the subset of readers who are willing to pay for content. And that's all they do. You can do audio there as well. You can, create podcasts and distribute them. The other really great thing about Substack is you own the email list. They give you everything. You own it's all run through Stripe, and so you're portable. They recognize that if they're not creating a platform that's worth it for their creators, that then they should have the right to leave and start their own thing. So you always have that option to take your audience with you off the platform as well. So every day I could download the email list of the people that have chosen to subscribe to Doomberg, which is approaching almost 12,000 now in the 6 months that we've been going, which is really fantastic.
Oh, that was my next question. Yeah. How long you've been doing it for? About 6 months.
Yeah. October 31st was our 6-month anniversary. Well, technically today. We launched our first piece on May 3rd. And we've had some pretty great growth. And we share all this data with our audience every month in the Work of Our Life pieces. The latest one we just called.
That's really great. I was having dinner with a content creator. I won't mention his name, but last night. And for those people who kind of have followed my journey or followed the Rebel Capitalist channel, that's the second channel that I started a few months ago, that I've really been trying to focus on spreading the message of how important freedom and liberty is in today's world. And of course, I talk about macro and I talk about finance and whatnot, but it's really also diving into those topics of personal freedom and liberty. And I'm doing that because I just feel this strong sense of urgency to try to wake people up. And I've thought a lot about how to really move the needle as to the best of my ability. And number one, it's with this channel. But what I thought about doing is just free workshops on like Thursday nights or something like that, where I just do live streams and teach people everything I know about YouTube or everything I know about podcasting, so they can go out there and create their own podcast. Now, if they want to talk about cooking or whatever, that's fine. But I'm just assuming that the majority of people that would tune in from the Rebel Capitalist channel or the George Gammon channel would talk about, macro from a standpoint of maybe Austrian economics, or just about the freedom and kind of liberty movement from a libertarian standpoint. And then I could, if I could just help 100 people, as an example, start a Substack or a podcast or a YouTube channel or all of the above, then I think I could get, we could really open up more people's eyes and really move that needle efficiently. So that's why I wanted to dive into your backstory, to really encourage people and show them that this can be done, guys. You can get these things off of your chest. You can communicate, you can spread the word just as easy as I can, or just as easy as Mr. Doomberg can.
It's funny you say that, because our last Work of Our Life was called Who Wants to Be a Chickenaire, where we basically lay bare our strategy for eventually going behind the paywall. It was not without controversy, but we because there's a whole subset of people for whom content should always be free, and the prospect of people getting paid to create their content literally angers them. We got some angry email responses. We hesitated for a moment about putting that piece out, and then we decided, the people that are going to get angry at this piece are never going to pay you anyway. So what do we care? Like, we're capitalists at heart. I love the Rebel Capitalist show. Like, we believe that good content should be compensated for. And look, if our content isn't worth paying for, the market will tell us. I mean, but nobody's obligated to pay us if we go behind the paywall. If we've humbly earned the right for 10 or 15% of our audience to follow us when we do go behind the paywall, it'll be amazing. It'll be thrilling. It'll be the work of our life. And as your point about freedom is as the gig economy for brains evolves, there's less and less centralized control, and that's dangerous to the powers that be. And this is where Substack so far has been very good. Like, we don't touch the hottest of the hot button issues. We've stayed away mostly from that, the name I won't say out of risking you getting demonetized for this episode. But even the fact that we have to give thought to that is the dangerous thing. Like, why should anybody care what we write about? Substack is very light touch. We'll see how long that lasts. They could always get parlored, as we say, if it gets too free thinking in their authors contributors. But they have what the sort of the standard woke community would say are some pretty controversial authors on there. And from what I can tell, they're allowed to write what they feel like writing, sort of consistent with the First Amendment. And so, but the one thing I would say is they do give you your audience. And so if you got deplatformed on Substack, or if Substack went away, or if Substack got bought by Facebook as they're trying to build out their competitor, which is called Bulletin, then we would have the option to start, Doomberg.com. Somebody squatted on it already, and I'd have to go and buy it from them. But pick your favorite website. We could take that audience with us, and hopefully, if you just have a MailChimp, you can still communicate with your audience and build your own website that way. And so Substack is great. But also, I really do appreciate the Substack's personal touch. We were reached out to, even though we're not a paywall, and it's all free right now. They see the growth of the channel. They see the potential in the future. We have a person. We can text that person. We can call that person. We can DM that person. They're very responsive. They want to build a platform. They want to capture that sort of, the network effect for blogging. And there's lots of competitors out there. I mentioned Bulletin. There's, the newsletter industry has been around for a very long time. This is sort of a modern take on it. Last point I'd say, incredibly easy to produce the pieces if you know what you're doing. So the interface is great. But one point I would say, as you think about your workshops and getting the next 100 rebel capitalists out there, and we said this in our last piece, one should not confuse barrier to entry with barrier to success. You are one hard-working dude. You put the time in. You've invested your own personal money in getting the editing right, getting the right equipment, sounding good. We do the same. We edit every piece. We've invested in photoshopping skills. We have our Bloomberg terminal. These are all expenses that anybody can start a Substack. Starting a good one requires a lot of sweat equity, perhaps some cash, the ability to stand out, friends that will help you. We're very grateful for people like you and Grant Williams and Chris, who's been able to help us grow this Substack. And who knows where it'll go. We wrote in the last piece, but our strategy is we're just going to keep everything free until growth stops.
Yeah.
And then you go behind the paywall because you've defined your addressable market, letting the market tell you what that addressable market is. My main
thing is I just want to let people know that it's possible. I mean, we're living in a day and age where, firefighters and nurses and doctors and police officers and, people that work in companies with over 100 employees, they're being fired for, we won't go into it, but for their belief system, let's say. And to let those people know that there's other opportunities out there that may be even better than what they were doing before. That's what I'm really trying to do with these free workshops. We'll see how it evolves. But let's get into some of the more macro and investing topics. Prior to hitting the record button, we were talking about coal and we were talking about copper, some of these commodities that I know a lot of my viewers and listeners are interested in. So you've done some deep dives here. What has been the conclusion of your analysis?
It's a fascinating time, George, because with this global warming summit going on in Glasgow, and we wrote a piece. Our most latest piece is on coking coal, actually, which is not coal, and It's titled "Coking Coal Has a Branding Problem."
Okay.
And we were treated to quite the spectacle on the first morning of this gathering, when the British Prime Minister, Boris Johnson, was being interviewed on the BBC. I can't say that I would call it an interview. He was being berated by the BBC climate editor for having the audacity to not object to a quote unquote new coal mine. And this line of attack, we have this attack on fossil fuel supplies in the Western world, which is not replicated in places like Russia and China, and they're just stepping into the void and making lots of money as we shoot ourselves in the foot here. But the thing about that piece, which is so hysterical and horrifying at the same time, is they got into an argument about coal, and Boris Johnson was defending himself by pointing out to how little coal is used in the UK power grid, but neither of them seem to realize that the coal mine, at issue is actually a coking coal mine, and coking coal is not used to make electricity, it's used to make steel.
So metallurgic coal.
Yeah, met coal.
Okay.
And you can't make windmills without steel. And you can't make all man, or you can't make electric vehicles without steel. And today, Britain imports its coking coal, and there's these large, dry goods cargo ships that float around the oceans and burn lots of fuel and pollute the oceans. And the steel mills in the UK are reliant on these imports from places like Australia and Canada, and other big coking coal producers include obviously China, which is a very big coking coal producer, and Russia. And so it's an entire discussion around quote unquote coal, where neither of the people involved or most of the audience watching have any idea what they're talking about.
Yeah, right. They have no idea how it's produced. They think the fair, like the electricity ferry, just comes in and waves a magic wand, or the windmill ferry, and poof, there it is. It just appears out of nowhere.
It's not even, it's not even coal. Like, they're arguing about coal as a source of power, when in reality, you can't make steel today. I mean, that's a bit of an exaggeration. You can recycle steel in an arc furnace, and there are some research projects on trying to make steel from things like hydrogen, but instead of coking coal. But by and large, you need coking coal to make steel. The windmill, the wind turbine towers are made of steel. The electric cars are made of steel. There's no path to radically reduced carbon emissions that doesn't go right through steel. But that mine is never going to get permitted after that fiasco on the BBC. I mean, let's be clear. We are going to attack supply. Prices are going to skyrocket. And these decisions are being made by people that have no idea where stuff comes from. And that was really the point of the piece. I'm not pro coal. I think we should be actively replacing coal plants with natural gas where we can. I think we're very pro-nuclear over at Doomberg, but you can't be anti-coking coal and be pro-economy, because you need steel to run the economy, and there's just no two ways about it. And so, as a consequence of the Prime Minister having no idea what he's talking about, being berated by the BBC climate editor who has no idea what he's talking about, we're going to do a really stupid thing. And that's fine. We've come to we're at peace with this. This is just the way the world is going. And how do we put ourselves and our clients in the position to, hedge themselves or invest in the way that the world is going? But it's just so ridiculous that we had to write
so
about
how should the investor interpret that? What are the takeaways for the investor? I know my good buddy, hedge fund manager, Chris McIntosh, in some private conversations, he's told me, he says, George, I think that the cure for high prices is no longer high prices. In the sense that yes, usually in a free market, you would have supply come online that would bring the prices back down to an equilibrium. But now he says we might not get that because of this whole ESG movement and people just being completely out of their minds and not being able to do a cost benefit analysis. So you have no more supply coming online, was his point.
It's not even a cost benefit analysis. It's a complete and total aversion to thoughtful bridging solutions to the place everybody wants to go, which is an economy that is far less polluting and far less CO2 intense. And there's pathways to do that intelligently that don't involve starving tens of millions of people, because let's be clear, energy is life, George. We wrote a piece called Why Are Cows Sacred, where, energy is life, and there's just no circumventing that. And the people least able to afford, they're right on the line, are going to be the first casualties of this insanity.
And explain that, because energy prices go up and it's a larger portion of the lower incomes demographic a larger portion of their paycheck.
Yeah, I saw Alex Epstein being interviewed on a British news channel. He's sort of a very larger than life figure in the "this is all crazy" space. We're nowhere near him in that sort of in that way. But he quoted something which stuck with me. I don't know if it's true, but he said there's something like 3 billion people on the planet whose annual electricity use or energy use is less than the amount a fridge would use in an American home, over the course of a year. And that really drives home, there's this amazing phenomenon of, as economies emerge, their intensity as it pertains to their use of fossil fuels skyrockets as the GDP per capita grows through certain levels. And there's huge swaths of the planet that are just entering that now. And so the oil squeeze is really more about demand, accelerated by our attempts to crimp supply. But because energy is life, the price elasticity of demand for these materials is highly, highly inelastic, as we're finding out. Like I could tell you today, I have my Bloomberg open as I'm talking to you. Natural gas today in the U.S. is $5.85, but natural gas for delivery in Asia is $31 a million BTU. And natural gas for delivery in Europe is $27 per million BTU. On an oil equivalent basis, that's almost $200 a barrel oil already. And these are LNG, liquefied natural gas. But people have no idea, like, energy is life, and we can pay that. So George Gammon, if the price of gasoline goes to $10 a gallon, you're still going to fill your tank.
Right.
But for a large portion of the planet, $10 a gallon gasoline, or the conditions that lead to that, means starvation. We wrote a piece that is our most read piece, maybe 55,000 reads, called "Starvation Diet," where we're all sitting around at cocktail parties, taking bricks from the bottom to put them on top, and eventually the Jenga tower is going to collapse. But we're not going to feel it. Larry Fink at BlackRock's not going to feel it. But if you're right on that edge, that $2,000 to $10,000 GDP per capita, and you're growing and emerging, there's no path for them to join sort of the emerged economies without massive increase. And I don't know if you saw recently, but BP came out and said that the demand for oil had crossed 100 million barrels a day again, which is higher than pre-COVID, and supply is down. And as you said, it's not that that the cure for high prices is no longer the cure for high prices. You just can't do it anymore. Like permitting is they shut down the Keystone Pipeline. We have a neighbor to the north that has an enormous amount of energy to be sold. But even in Canada, Trudeau was at the conference saying that they've committed to stop all of this. And I don't know that people think through the consequences of this. Like, there are smart ways to do this, and we seem to be choosing all the dumb ones. And that's kind of what we write about. We're all for, we laid out a piece called, we laid out our policy in a piece called "America's Energy Strategy is Bonkers." And we just said, go full speed nuclear, go full speed replacing coal with natural gas, go full speed on plug-in hybrids so that you can optimize fuel abated per pound of battery, because the batteries have to come from mines, and those mines have environmental consequences and need diesel fuel and tires and all the things that come with it. And of course, build out renewables, but also have a huge Manhattan-style project on storage as well, so that we can take these intermittent powers and stabilize them and stabilize the grid. So we're just at a crazy time. It's very frustrating to watch the British Prime Minister and the BBC climate editor argue over about a coal mine and not even know what the coal mine does. It's sad.
Yeah, exactly. I see so much of that insanity in the markets today, and not just with energy, but with meme stocks, with crypto. It just seems like the entire world is kind of losing their mind.
Yeah. Well, to answer your original question, what is the investment thesis? I mean, if this goes the way you and I worry it might go, I'm not even sure I think it might go, because you hope that people come to their senses. you're going to see sort of a gamma squeeze on these fundamental commodities like you'd never believe. Like we wrote a piece called Oil to 300 with a question mark. If you just take oil to its all-time high as expressed in ounces of gold, if you and I think that's real money, then just getting to the all-time high they already saw not that many years ago would in today's dollars, because the price of gold is appreciated or the US dollar has depreciated, as you and I would say it, $300 is sort of table stakes for just getting to the all-time high. And already we see the administration, who's very, one of their first acts was to kill the Keystone Pipeline. They're begging OPEC to produce more. What kind of policy is that? And so if you just take the logical consequences of our stated policy, which is crimp supply in the Western world and beg OPEC to produce more, we're going to give share to OPEC. And one of the analysis I saw, I wish I could remember the guy who said it, but when OPEC gets controlling market share, that's when you see these giga spikes in oil, because they're price optimizers, and so when they can set the market price, they jam it. Yeah. And we're the logical conclusion of our stated policy, which is oppose everything we can on the home front and beg OPEC to pump more, is OPEC's going to have more market share. And with more market share comes pricing power. And these people don't like us, and energy is life. So we are ceding control over our lives to people that don't like us. And it's clear as day to see. We're screaming about it. We're a free blog on Substack, and we can see it. We wrote a piece called Putin's Fools Rush In. Who holds all the trump cards in Europe today? Vladimir Putin. Who gave him those trump cards? We did. He could shut the gas down tomorrow to Europe, and that's that. It's his gas. He's not obligated to sell it to us. We have no alternatives. We must buy from him. What's the clearing price when energy is life and you have no choice but to buy? And so it's just, we're going to learn this lesson the hard way. There will be a revolt. There will be a mass starvation event. The price of fertilizer has skyrocketed to all-time highs. That's going to translate into higher food prices. That's going to feed inflation. There's a hard way for us to learn these lessons. There's an easy way to see them. And yet here we are, we got to go through it. And it's just, it's frustrating, but we have the outlet. It's fun to write. But at the same time, it is amazing to watch.
One thing I wanted to point out also, when we were talking about how this disproportionately affects the poor and middle class as far as increasing energy prices, at a certain point, it does affect you and me, in the sense that we have access to fewer goods and services. And this is something that I've been trying to just pound the table on both my channels for the past few months, because so many people see their portfolio going up 10,000% because they own Shiba Inu or something, or even coal or gold or oil. And they think that they're getting rich, but they forget that if the economy is producing fewer goods and services, if you have access to less stuff, then you're really not getting richer, you're getting poorer. And what happens if those high energy prices not only reduce the amount of goods and services, but have power outages that come along with it? That's going to affect the rich, the wealthy, the poor, and the middle class.
Absolutely agree. We wrote a piece not that long ago called "One Flew Over the Prepper's Nest," and we confessed that in fact the Doomberg team consists of people who have a bit of a preparedness mindset. I think about, I don't want to be labeled as a domestic terrorist, but I do want
not to in today's day and age.
Yeah, I view so the just-in-time inventory system is in the process of collapsing.
Yeah,
and since the places from whom we procure the things we need to run our home factories aren't keeping sufficient inventory to ensure against a stock out, we do that in our homes. We're not hoarders, we're not crazy, but we have a thoughtful working capital strategy for our home factories. Our factories exist to ensure the health and well-being of our family. There's 4 inputs at most homes. It's natural gas, it's water, it's electricity, and it's goods and services. There are 2 outputs, which is garbage and sewer. And we have to have a plan for losing 1, 2, 3, or all 6 of those things. And for how long are we willing to plan to lose those things? And if you treat your home as a factory, and then you just study the working capital needs of your home, we advised in that piece, like the easiest thing you can do is just double the working capital of all of your consumables. And that'll get you through most of any potential issues that might arise.
That's a great way to look at it. What a neat analytical way. What was the name of that post?
One flew over the prepper's nest as of a couple of weeks ago. And we detail, look, if you want the set it and forget it trade, you can buy some Mountain House food, 6-month supply, a couple of grand, leave it in the basement. It's good for 30 years. I happen to have, whole house generator and a few other spares. And actually, we had a local emergency last year, and I was giving out generators to neighbors and friends, lending them out. Being able to help your neighbors and friends in time of need is one of the driving factors for us. We hosted several people in our home because of the local emergency. We had plenty of food and a few drinks, which is always helpful for people when they're at a time of stress. And but we were able to do that because our friends know that we love them enough to think not only for ourselves, but for them. And it's okay to be independently prepared for things and to see your family through emergencies. And yes, I recognize it's expensive. And for many people in the economy, they have other priorities. There are ways to do this on a budget. There's lots of great YouTube channels that describe it. But the vast majority of people don't even think about it. They just accept that when they turn the tap, water comes on. This is a rare thing. I know where the local water sources are that surround my home and what I would do in a scenario where the city water didn't work anymore and I still had to flush some toilets. Most people couldn't go 2 or 3 days losing all 6 of those things. I think I could comfortably go 30. I don't want to go much more than 30 because in a world where I have to, that's probably not worth living in at that point. But this is a thought, like I view your home as a factory. What are your working capital needs? What are your inflows? What are your products? What are your waste products? How do you manage them? If garbage, when we had a dry run with that, with the thing we won't name, the shutdown of the economy, the garbage stopped coming. The garbage man stopped coming to our neighborhood for 3 weeks, and garbage was piling up, and we had a plan for that.
Let's for a moment go back to what you were saying. I want to try to connect some dots when you were talking about OPEC. I'm sorry for jumping around here.
It's your show.
But when you were describing the fact that OPEC in the future may have quite a bit more leverage, what I was thinking about is the petrodollar.
Yeah.
And I was thinking about Afghanistan. And I'm not going to say everyone has their own opinion on Afghanistan. I think is pretty obvious it was a debacle. And if I'm OPEC and I'm thinking to myself, okay, I did this deal with the United States where the bargain is they offer me military and I price my oil in dollars to give artificial demand for the dollar. And we know the benefits that gives the United States. But if I look at Afghanistan, I'm like, whoa, wait a minute here. I don't know if the United States can uphold their end of the bargain. And therefore, I might maybe do a military deal with Russia, which is what we saw from Saudi Arabia. And therefore, maybe in the future, they're pricing more of their oil in rubles, at least the oil that could be going to Russia, if that's the process. So when you're talking about them having more pricing power as well, how do you think that works with the petrodollar? Do you think that they could be pricing more of their oil because they have so much leverage in other currencies, and therefore that creates less global demand for the dollar?
I'll give you a slightly different view. And not to go too far down the rabbit hole of paper market price suppression of precious metals. But if you assume that the price of gold is being suppressed in the paper market, who are the 2 largest acquirers of gold in the past 4 or 5 years? It's Russia and China.
Right.
And they're sort of fading what we're doing in the West. So we're crimping our own supply. They're investing. They now halt, Putin holds all the cards in Western Europe today. The geopolitical game has never been easier for him. And believe me, we write these things not with any glee. We write these things because we would prefer it were a different way. And so
wake people up, just like I'm trying to wake people up.
So if you think there's a great debt jubilee coming, which inevitably there sort of has to be, how much gold you own might be important for that negotiation when the Great Reset happens.
Yeah.
And so, if the petrodollar goes away, it's going to be replaced with something. It's probably going to be replaced with a global currency. And there's going to be a Great Reset. And how much debt you owe and how much gold you own or gold you own are probably going to be two important inputs into the great summit that occurs with all of the global powers when the new currency rules are set. And so if you look at what Russia and China have been doing, but neither of them went to this conference, and they're setting about preparing their own economies, optimizing for themselves. And we could scream about it and we can say, Russia this and China that, and you're just propaganda and you're a denier of this and you're a denier of that. Our sort of yelling at each other is not going to stop Vladimir Putin or Xi from doing the things that are in the interests of their own people. And, who could blame them? Who owns all the cards today? All the manufacturing's in China. They could shut down magnesium production, which will stop the production of aluminum, which will stop the production of cars in the Western world tomorrow. Who gave them that power? We did, because we didn't like magnesium smelters in our own geography, sort of not in my backyard syndrome taken to the extreme. So, I don't worry too much about the petrodollar per se. I think sort of one level deeper, which is the Great Reset, which everyone knows is coming, has to come, George. We are living a giant Ponzi economy. And who's buying gold while we're suppressing it? What happens when you suppress the price of something? The people that know the price is being suppressed accumulate it. And that's what's happening with Russia and China.
Do you think there could be an overlap with the ESG movement with the gold miners? So we've seen that really impact the supply or CapEx in oil or coal, et cetera. But do you think it could spill over to the gold miners? And I'm getting this idea from Russell Napier in his last conversation he had with my good buddy Eric Townsend on Macro Voices. And This was his idea. I thought it was very interesting.
Another mutual friend, Cuppy, has the same thought, which is in the early stages of commodity super cycles, which I'm not calling that we're having one, but sure feels like we're having one. One of the gasoline that's poured on the fire is the spiraling price of things like diesel and tires and tractors and dump trucks and excavators and heavy equipment, and a shortage of labor because the inflation is biting you. These things directly impact the mine and the marginal cost of production. Now, the price of something like gold is different than the price of something like coking coal or oil, because those things tend to be consumed in short order. The price of gold isn't necessarily directly tied to the marginal cost of production of the gold miner, because there's a lot of supply. It doesn't get consumed. That's the whole point of gold. But if you think one step down, like silver is both a sort of, at least historically, money and also an industrial good. Just to go back to the insanity of yelling at each other about a coal mine when in reality it's for making steel. Most sort of people don't realize that without silver you can't make solar panels.
Right.
There's an enormous amount of silver in each of these panels. I happen to be a big believer in solar. I have solar in my home. One of my largest personal investment is in the solar space. But you can't have solar panels without silver. And so, to the extent that the inflationary pressures we're seeing feed the marginal cost of production for commodities that get consumed, that can be a real accelerant to the transitory inflation.
And less capital going into the production of new gold, because it's seen as a dirty way, or the process itself, gold mining, is considered dirty by the ESG types.
Well, the strategies, one of the strategies of some of the ESG types, I don't want to put everybody in the same bucket, is to oppose all production at every opportunity.
Right.
And and don't get me wrong, they've done a lot of good in the Western world. You can build these facilities and they operate in a way that is way cleaner and way more responsible than what you see in other parts of the world. When your competitor in China has zero water treatment at their production facility, it's hard for you to compete on price. And I know from personal experience in my old life, the hypocritical nature of the big American B2C companies who will source everything they can on price and buy from these Chinese producers who have no environmental, policy whatsoever and are polluting the rivers locally. And they use those as price comps for the Western producers. That happens all the time, George. It's if people knew, and I won't name the brands, but the big name brands in the West, the B2C goods, all the things you buy, their procurement departments hammer Western producers on price because they have a comp from, let's just say, a producer in China that has zero environmental protocols at their facility. And if I have to treat every ounce of water that leaves my facility absolutely I should, but then I'm expected to compete on price with a low-cost producer in China who doesn't. And then to see these exact same brands go out into the market and brag about their ESG, and they're all at the cocktail parties at this latest conference. The hypocrisy is just amazing. And so, it's so frustrating to know what actually goes on, and then to watch the news. Is that disparity is very frustrating.
Yeah. So let's move from gold over to cryptocurrency. And sometimes all you can do is laugh. I did a couple videos last week on Shiba Inu, whatever it is. And to think that you could have a joke crypto,
a derivative joke.
yeah. It goes up to a $50 billion market cap. I mean, can it get any more insane?
I think the second or third piece we ever wrote was every Doge has its day. And we write about what's in the news, so I don't want to keep saying like, oh, we've written about that, but we've written about that. And when our take on it was, we spent a lot of time thinking about what was it like to be in Weimar during hyperinflation. What were the people thinking? The boiled frogs, as we would call it. Like, how could they not know? And we see all these things around us. And I wonder, like, what does this mean that Dogecoin is got 100 billion market cap, if market cap is even the proper way to express it? People are expressing, I believe. So, like, again, just because I don't understand it doesn't mean it's not important. It doesn't mean that I shouldn't try to understand what the signal is telling me. So people have such indignation that Dimitri Kofinas of Hidden Forces is another podcast host.
He's great.
He's labeled this market nihilism, where what you're investing in is worthless, but you do it because it's worthless, and you assume someone else will just buy it from you. So I think there's an important signal from these market extravagance that we as value investors, the Austrian School of Economics, believe me, like we like to say here, we earn in fiat, we save by buying real assets, and we invest privately where we can affect the outcome. I don't trust any of it. I could never buy that coin. If you told me this coin has an 80% chance of tripling tomorrow, I don't even know I could pull the trigger, because I can't buy it. It doesn't compute with me. But there's a whole army of people for whom all they need is another fool, and there's plenty of fools. Well, what does that signal? That signal could mean the market is expressing that the currency will soon be worthless. Yeah. Now, I'm not saying that's what the symbol means, but what that signal means. But it's one possible outcome. They have such little regard for either the currency or their hopes in the future to generate more that they YOLO trade into the next hot thing, knowing that it's worthless, but assuming they can get out, or this is their very best chance to make it. Back to your 100 people in your workshop, maybe this is their workshop. Like, I can YOLO trade and I got a chance. It's like a scratch lottery ticket. And it's mind-blowing to me. I could never invest in it. I would separate sort of the technology of crypto from the speculation of the tokens, because I think they're actually two very different things.
Yeah. And I separate Bitcoin. When I talk about crypto and Doge, I'm not talking about Bitcoin.
We're just talking about raw speculation, tulip style. And it's the one of the things we write a lot about, what we worry about with inflation, is for the first time ever, we have this integration of wildly uncontrolled social media that injects a level of fervor into all of these events that has never been experienced before. And one of the things we worry about is if inflation is driven by inflation expectations, that same social media fervor could be whipped up about inflation by people who don't like us, because social media can be manipulated, as we know. And inflation expectations could be manipulated by, take your favorite foreign actors that don't like us. And, one of the things we write about is when the first Big Mac, the first $20 Big Mac goes viral on TikTok, does that not contribute to inflation expectations? And could the social media part of this new game, which I guarantee you the Fed has no ability to model, let alone understand or know that it even exists. If Doge could be worth what it's worth, or Shiba, the derivative of Doge, can be worth what it's worth, that's just proof that people could be manipulated into thinking something on a vast scale that matters. And so
forced that they have to go so far out the risk curve to maintain or increase their purchasing power relative to the rate of inflation.
That's a self-enforcing loop. So the perceived rate of inflation, nothing drives inflation like inflation expectations. If you think the price of bread is going up 25% tomorrow, you're going to buy 5 loaves tonight.
You're right.
And my point is, and the point we write about, and our point as a team is, this is the first inflationary spike in the history of humankind where social media exists and can proliferate this on a scale and a speed that is unimaginable. So chart after chart, what are you seeing? We're seeing chart after chart. It's just weird. It just had like Avis car rental this week went totally parabolic, right? I'm sure you saw it. It went up from $170 to $550 a share. It closed much lower than that. When we see a GameStop or an AMC or Dogecoin, or pick your favorite, whatever the mania is of the day, we see the speed with which crowds can be mobilized, convinced of something, and induced to act. And what happens when they get mobilized and induced to act on their inflation expectations? So either this is an indirect signal or proof of the direct ability to control it. And the people that control social media today aren't necessarily our friends. It's a scary thought, George. I mean, that's why it's called Doomberg. You don't come to me for the rosy outlook, but it's real. It's undeniable that social media can be manipulated, and inflation expectations feed inflation. And we're in an inflationary spike. And this is the first time ever that everybody involved in this game of inflation expectations is tied to some form of social media.
Yeah, but even if it wasn't manipulated, if you look at the way the algorithm works, and the platforms, what are they trying to do? They're trying to keep you on there as long as possible. Clicks, that's right, views and whatnot. So they're going to just feed you information that they know you'll most likely respond to. So it creates this echo chamber where you start getting into, let's say, Dogecoin or Shiba Inu or whatever, and then you're just getting more and more people saying how it's going to go to 1 million, and then you get the FOMO, and it's just this feedback loop that just continues to take people into areas that are just more and more insane. One thing I wanted to get your opinion on, I just wrote down, is you and Chris especially get more into the weeds than I do as far as actually analyzing the balance sheets and the financials from a lot of these publicly traded companies. And one kind of idea that I was trying to think through the other day, how many of these companies that have gone public, let's say over the last 3 years, or have done incredibly well? And one thing that came to mind the other day was WeWork now trying to go public again through a SPAC, and or Hertz. They did this huge deal with Tesla the other day. This is kind of what sparked the idea.
Sure.
And I'm like, let's just assume for a moment that we would have had that Bitcoin was created in 1997. Mm-hmm. And just for a moment, and I know a lot of people push back on this, but let's just, in this hypothetical world, assume that it became adopted as money. And so we had sound money, and let's assume that the banks wouldn't, lend it out in a fractional reserve manner. That let's just assume that it stays at the 21 million. So we've got this sound money system. Well, the Fed wouldn't have been able to do what they did in 2008. Arguably, we wouldn't have had the GFC. But interest rates would be at their normal, 6, 7, 8%, something like that, which most people today can't even fathom. But in that world, in that environment where you've got an 8 or 10% hurdle rate for money going to these new startups, would Hertz exist? Would Tesla, I'll go even that far, would they exist? Would AMC, would some of these meme stuff, or would 70% of the companies that have gone public over the last 3 years that are unprofitable after 10 years of being in business, would they even exist today? Another one that comes to mind is Uber. What do you think?
Yeah, I don't think they would. You're describing what we call the stupid way of analyzing a stock. The stupid way of analyzing a stock is practiced by a group of people that we call money haters. It's all sort of good fun, but in reality, prices of securities today have no reflection back to, by and large, have no reflection back to the present value of future cash flows.
Right.
This is just not how we are valuing securities. And it's not different this time until the thing collapses. But the quaint thought of a security should be measured by the present value of its future cash flows, corrected for risk with a reasonable terminal value. Those types of companies that are running that way, and the investor relations teams that present those types of analyses to the market, are just not covered. They're not invested in, and they don't move on fundamentals because all the money is chasing the next Doge, chasing the next Avis, chasing the next Tesla, chasing the next AMC. We had a whole series of pieces that we call super stonks, like these stonks that are so crazily valued that they have no hope of ever achieving the present value of future cash flows to compensate for the valuation. AMC was one of them. AMC was a broken company before COVID destroyed its business. Now it's just a meme stonk. It's three symbols on a screen and a bunch of people jockeying back and forth. And in the long run, sophisticated investors will fleece retail. That's what's going to happen with AMC. And that's fine. It is what it is. It happens all the time. It just happens to be happening a lot today. Uber is, Uber, we wrote a piece, Super Stonks Uber. Uber was born out of breaking the law. They just made a decision to break the law in every major city that they went into, and they just ignored the law. And this was sort of regulatory arbitrage. We're going to grow faster and become more popular than you can police us. But it's still a cash losing business. So I've traveled, you've traveled. The last major city I went to, the taxi cab was a fifth of the cost of an Uber, because they have to price themselves at a point now where if they're truly interested in sort of monetizing the network effect that they've built, it just doesn't work. We wrote about Beyond Meat, which at its apex was worth more than the entire value chain of ingredients that fed it. It's when you look at statistics like that, but it's not a growing company. They just missed quarterly revenues, and the stock is down probably 30 or 40% since we wrote about it. We don't do single stock advice. We just comment on these crazy entities. And back to your question, if we had sound money and companies had to earn their cost of capital to be rewarded in the equity markets, none of these things could exist, which is the whole reason why people like us think that sound money is a good thing. We look very stupid today. That's why we call it the stupid way of, analyzing companies. And back to your point, like we try to earn in fiat, buy real assets, and then invest privately where we know that we can affect the outcome. And the private markets have gone a little crazy as well, but not nearly as sort of insane, at least as what we see at the most frothy parts of the public market. But to be clear, there's a lot of zombie companies that shouldn't exist because we've destroyed the ability for companies to go bankrupt. Everybody needs to be saved.
Right.
But there's a lot of really good companies that are selling for very cheap in traditional ways that might never go up because nobody buys them. I mean, ultimately, price is set between a buyer and a seller, not based on fundamentals. A lot of those companies would do well to just go private and pay themselves a dividend. Because
and let's be clear that it's the big corporations that can't go out of business, but we can completely destroy the small and mid-sized businesses,
which is why I think the gig economy for brains, where you actually go micro, not small, where the George Gammons of the world start the Rebel Capitalist show and put their own sweat equity in day after day, recording after recording. In our case, piece after piece, tweet after tweet, chart after chart, Photoshop after Photoshop, where you build an audience and people say, I like George and I want to pay George, or I like Doomberg and I want to pay Doomberg. Ironically, one of the reasons why we haven't turned on the paywall is we kind of view that as a hedge against inflation. And if we just sort of keep it free through the transition, whatever value we've created today in today's terms will still exist on the other side of the wall. Like, it's a nice little hedge against inflation because you have a gig economy business, a subscription driven business with a loyal audience that's willing to pay you. To go full circle to the first question you asked me, like on YouTube, it's hard to directly monetize with your audience, but on Substack, it's very easy. So let's just say we went behind the paywall at $30 a month with a commitment to write at least 10 articles a month and direct access to the Doomberg team. If inflation triples, or cuts the value of $1 by a factor of 3, we could charge $90 because in the future $90 is worth 30.
Right.
And so I kind of view the gig economy for brains as a counter to this destruction of the businesses in between big and micro, which we've seen. And also the liberty part of it, as long as I don't get deplatformed and I sort of stay within the lines and speak in code, like we've not mentioned the 5-letter word on this podcast, you can sort of skate by the big censors of the big tech companies. But I think that's the next revolution. And that's why we wanted to jump in the pool as Doomberg, is to just the micro economy where, and we are 1 degree of we're 1 degree of separation away from George Gammon. We've never met in person, but you've read our stuff. We've watched your stuff. We talked to each other via Twitter DM, and you said, hey, come on the show. We'd happy to have you on the show. And we're thrilled to be on. That's the future, potentially, I think, both as a hedge against inflation and also a hedge against the destruction of that mid-sized businesses, where the social cost of, carrying the expenses of employees and healthcare and all of that, Social Security and all of those other things is gone for a micro company. Like we're a very small firm. The Doomberg team is very tight. And we could do this. And so I think that's potentially the future.
Yeah, that makes a lot of sense. I was trying to go through while you were talking and get Mises had a description of the crack-up boom. And it's just a paragraph, and I can't find it, but I know I've read it a couple times for some of my whiteboard videos, and it just nails exactly what we're seeing in the United States with equity markets today. I mean, he describes it like word for word to the T. And the thing that really, I think, concerns me, you can sit here and pound the table and say, oh, we're in a bubble, we're in a bubble, we're in a bubble. And people just say, yeah, I get it. But the real world effects of that is that we are creating an environment where people right now are consuming far more than they produce. I mean, way more than they produce through either government transfer payments, through PPP, or through their portfolio going, parabolic. And at some point in time, those chickens have to come home to roost. See, I did it again.
You did it again. Well, I think worse than that, George. I think these types of environments radically exacerbate income inequality.
Yeah.
And so what we're seeing is we wrote a piece called "Let Them Eat Pizza," which was our sort of outrage at the Fed insider trading scandal. The Dallas Fed and the Boston Fed, and there's an orgy amongst the top 1%, an orgy of, taking for them while they're getting as good. And the system ultimately, there's a straight line between Kaplan day trading, swinging around millions of dollars of futures, sitting on his knowledge of what the Fed's about to do, and pitchforks. There's especially when you mix in food inflation, unemployment,
shelter,
various mandates that are limiting a certain portion of the people from being able to work. There's gonna be an anger crisis in the U.S. pretty soon, which is another reason why we'd like to be a bit prepared for it, because if the trucks stop rolling, you don't, how much are you sort of outsourcing for your home factory? But there's an anger crisis coming in this country, and the top 1% has never had it so good, which is fine. I mean, we are capitalists, but the game is rigged. The game is rigged, George. Like if you can't go bankrupt, and your YOLO calls always pay off, or if we've said another way, a society is nothing more than the trust of its institutions. And for centuries, Americans trusted their institutions. And let's take it a step further. The only thing standing between a market apocalypse and what we have today is the Fed and confidence in the Fed. Oh, the Fed's got our back. Fed printer go brr. If this insider trading scandal reduces the confidence in the Fed, that could be the catalyst for doom. But really, our institutions are broken. Could you imagine before the past 2 months the prospect of the Fed governor, the presidents of the various Fed banks, YOLOing Fed futures and REITs while they're adjudicating on the financial policy of frankly the world? It's mind-boggling. How rich do you have to be? Like, how greedy are you that you're a centimillionaire ex-Goldman Sachs guy, and yet you still have to front run the country? It's really remarkable.
Do you think we'll get to a point with censorship where the social media platforms will not only censor kind of the woke agenda, but or the people who are seen as anti-woke, let's say.
Sure.
But also the people who have a different or a dissenting view when it comes to economics.
Of course.
So
that's what's coming.
Powell comes out,
yes.
Let's say 3 months ago and says, oh, don't worry about it. Nothing to see here. Inflation is transitory. So then you and I go out on Twitter and say, this is nonsense. Inflation is not transitory, but yet we get censored or maybe even deplatformed for saying that because it's deemed dangerous, let's say.
Of course. It's already happening. It 100% it's going to happen. They're going to train themselves on how to do it on certain topics that most people think are okay. And then once they have that power, they're going to do it. This is the history of all democracies when they fail.
They condition people to be okay with it. The people are
and now we've learned how to do it
until
it happens to them. And it 100% it's going to happen. And you're seeing it already, sort of trial balloons in Australia with the no anonymous social media accounts, and then some similar movements in the UK. And there'll be great reasons for it. We're going to stop online bullying, and we're going to, we wrote a piece called Dystopia Coin about it was based on your appearance on QTR, which was really insightful for us, which is this whole Jay Powell renomination battle is more about, the Fed coin.
Yeah, right.
And the ability to program how people spend money. Again, back to what we mentioned earlier about, what were the people thinking in Weimar? There's been all kinds of societies that collapsed into dictatorships. What were those people thinking? Well, they're probably thinking what we're thinking. And who were the first ones to get rolled up? It's people like you and I. So we have no doubt that that's what's coming. Of course, it's what's coming. It's inevitable, unfortunately, that's coming. The book behind you, as I'm looking you on this Zoom call, is 1984 by George Orwell.
One of them.
I could see it. That's what I'm looking at from my vantage point. You're looking at a green chicken. I'm looking at George Orwell. That's Dystopia Coin. It's coming, and it'll be. Here's how it'll go, George. We'll give everybody $10,000, and they can spend it on food. Hey, great. I mean, I'd go spend that. You'd go spend that. Who doesn't want $10,000? And then it begins. Well, you can only spend it on certain food. And now we're going to widen it. And so in the piece that we wrote, Dystopia Coin, we said, hey, do you think you'll be able to buy bullets with FedCoin? Of course you won't be able to buy bullets. What about weed? No, you won't be able to buy weed. Will you be able to buy pornography with FedCoin? Of course not. Okay. So that there are things that we all just assume, and it's probably okay, the Fed won't let us buy. Where does that end? Who gets to draw the line? Where is that line? Can you buy a MyPillow? Like I didn't vote for Donald Trump. The MyPillow guy seems to be sort of the persona non grata of the left. Can you buy a MyPillow with FedCoin? My guess, probably not. But the point of that thought experiment isn't for us to draw the line. It's to communicate to people that line's going to be drawn. And that power over where to draw that line, if we do go down the FedCoin route, which I'm convinced we will, that power is going to be in the hands of people that might not like you, might not like your opinion. It's a very slippery slope. Can I go buy a Remington 870 with my FedCoin? Probably not. Oh, we're not violating the Second Amendment. You're just not allowed to buy a Remington 870 with your FedCoin. It's a very backdoor way to strip people of what little liberty they have left. And, we're going to write about it, and we'll probably get deplatformed eventually. Knock on wood, it hasn't happened yet. But
let's talk about something more optimistic. And I just wanted to point out for the viewers and listeners that this gal that I don't know if she's been nominated, that her name is Amarova. I think her first name is Soleil or something like that, but she's come out and openly said how she wants a central bank digital currency. This is for the Biden administration. I think she's the controller, something like that. And how she also wants the Fed to come in and micromanage the level of the S&P by buying and selling stocks. So this is, we're not talking about tinfoil hat here. They're talking about it right now. But do you have something to comment on?
I'm waiting for the optimism.
Oh yeah, the optimism. So I don't know if you know this, but I've got two channels. One is the George Gammon channel, and the other is the Rebel Capitalist channel. The Rebel Capitalist channel was taken down off of YouTube last week, and so, and I don't know if you know this, but Ron Paul, his second channel was taken down maybe 3 or 4 weeks ago. Anthony Pompliano, maybe a couple weeks ago. And, on the Rebel Capitalist channel, I'm very careful about the words I use and the words I don't use. And, I'm talking about topics that I know are relatively sensitive. I try to abide by their rules as much as I can, but it still got taken down with no strikes, no warnings, nothing. Just 1 minute's there, the next minute it's gone. But I went and I tweeted that out with an app mention for Team YouTube or whatever their customer service is, because I saw that's what Ron Paul did, and his channel got reinstated, I think within 24 hours. And the good news is the response and support I received on Twitter completely blew my mind. I mean, that tweet went viral, and I know, like you and Chris, I'm good friends with a lot of the people I interview, but a few of the people I interview, I've only talked to them once. I mean, Mike Green would be an example of that. And I've got an immense amount of respect for Mike, and hopefully one day I'll be able to meet him. But he right away retweeted, like at mention YouTube, like, what are you doing? This is ridiculous. Something to that effect. Yeah. And it just completely went viral, and the support I received was really inspiring. And then Joe Rogan actually retweeted it. So I don't know if Rogan watches my videos or what, but after that, it really went viral. And then sure enough, because they received, I'm guessing, because they received so much pushback, about midnight that night, I got an email from them saying, whoops, sorry, we made a mistake. We went ahead and just reinstated the account. So my point there is, and I'm wondering if you've thought about this, I truly believe there's a lot more of us than there is of them. People realize that those who favor censorship have always been the bad guys. They've always been on the wrong side of history, regardless of what your political belief system is. And the fact that there's more people in the United States, and I think around the world, that believe in individualism as opposed to authoritarianism gives me a lot of hope for the future. What do you think about that?
So at Doomberg, we pride ourselves on being able to find the cloud in every silver lining. And I'll give you the alternative interpretation of that event. So first of all, I observed it in real time. We tried our best. We retweeted you. We joined the virality of the movement to get George's Rebel Capitalist channel reinstated. Here's the alternative interpretation. You had a huge audience to begin with. How many voices could not generate a viral campaign to get themselves reinstated? And those voices are being stuffed out left and right without recourse, with disdain, simply because they hold a view that our technical overlords think is objectionable. There's countless Twitter accounts that just disappeared in the latest debate. And look, I mean, you can be pro free speech even for speech you hate. We used to allow massive amounts. Yes, of course. I mean, it's not about the speech I agree with; it's about the speech I disagree with. And so, my counter to your optimism, and I'm thrilled for you that it got reinstated. But how many 200 follower, 300 follower YouTube accounts, Twitter accounts, 2,000 follower accounts, 20,000 follower accounts that got snuffed out that will never get reinstated because they didn't have a Twitter account with your following and a Joe Rogan and a Grant Williams and a Dimitri Kofinas and all the other people I saw coming to your support. There's been countless examples of George Gammons that were snuffed out and have to reinvent themselves and start anew. And that's where, so far so good on Substack, but I worry, because the Substack servers go through Amazon, just like Parlors did. And ultimately, I'm assuming it's Amazon, it goes through some cloud service provider that can be susceptible to political pressure. And so, and not to be like all doomy on you, but that's sort of my response to this is you're very lucky, not lucky, you earned it. You built this audience and you had the power through a different platform. If you didn't have that Twitter account, never would have happened.
That would have been tough.
Right. And so we got platform diversification is key. We are spending just as much time building a Twitter audience as we are a Substack audience for the same reason you're doing it on Twitter and on YouTube as well. It's not just to drive traffic to YouTube. It's great. Twitter is great. Twitter's insane that it hasn't figured out how to monetize what a wonderful platform it is. But for people like you and I, for people like Chris, for people like the other content creators we've talked about on this show, you have to have platform diversification, because you could have been caught in a vice with screaming into the void with nobody listening to you. Maybe you send an email to a few influencers and hope they say something about you, but your authentic plea on Twitter is what saved that channel.
Yeah.
And how many people don't have that audience to save themselves from the random? And by the way, that was not a person who canceled you. Let's be clear. That was an algorithm. Now, that algorithm was programmed by somebody who doesn't like some of the things that some of the people commenting in your channel said, perhaps. I don't know what happened. You have to figure out your own investigation there. But that was not a person who canceled George Gammon, because no sane person could listen to the videos you're producing and find anything objectionable. Even within the ever-tightening definition of objectionable that we're currently experiencing as a society, right? You are careful, you are professional, you know the lines, and you color within them. But if you didn't have that Twitter account, George, I think you'd still be clamoring to get your YouTube channel back.
Yeah. Let's for the last question, let's kind of take it back to the average investor, a retail investor, let's say. What advice would you have for him or her today?
Boy, it's a hard market, George. I mean,
I know it is. It's
so
not 1981 where you just buy the long bond and relax.
But in 1981, that seemed like a dumb trade.
Yeah.
I mean, it's one of the reasons why we decide to invest privately is because I particularly poor at timing. Like, trading the market is tough. Our advice is to prepare your personal life to create businesses, to, get skills, keep learning, all of those things that we talk about. Because to say you should buy A, B, and C in this market, I mean, or short D, E, and F, it's just impossible. We're probably a better contrast. So if you ask me what stocks I like, then people can go and sell them.
Yeah. And where would you suggest people learn or educate themselves well?
I think the very best place they can do that is at doomberg.substack.com or at DoombergT on Twitter. That team has really got their stuff together. They're cranking out great content 3 times a week. Also, the George Gammon channel on YouTube is really fantastic. I mean, that guy is just putting out high quality work week after week. It's undescribable how good he is at
breaking. Guy's a legend, isn't he?
The legend. He breaks down complexity on these marker boards in ways that everybody can understand. And that Doomberg team is doing the very same thing with the written word. And that's where I would go to learn as much as I could about what's going to happen in the future.
All right. Well, we'll leave it at that, my friend. Thanks for your time. Very, very interesting, fascinating conversation as always. And I can't wait to talk again.
You're really a great friend for having me on. We appreciate it. And better than anybody, building a content business is hard, and getting exposure like this to your audience is really an honor, and it's very humbling. And you're friend for life for having us on. And if we could ever help you in any way, that you can reach out, and we'll be right there for you, George. Appreciate it.
Awesome. We'll talk to you soon.
Thank you.
Hi, guys. I'd like to invite each and every one of you to the next Rebel Capitalist live event. If you are a fan of the Rebel Capitalist show, I guarantee you will love the live event. The next one is Houston, where you can meet and listen to speakers, all your favorites, from the Rebel Capitalist Show. People such as Dr. Ron Paul, Chris Cole, Lynn Alden, just to name a few. If you want to check out the rest of the speaker list and find out how you can attend, we'll put a link in the description below, or you can just go to rebelcapitalistlive.com. This is an event where you can learn to build wealth and thrive in a world of out-of-control central banks and big governments. But it's not just about building wealth. It's about increasing your freedom and networking with like-minded individuals, fellow rebel capitalists. It's an amazing event. I know you'll absolutely love it. Check out rebelcapitalistlive.com, and I will see you in Houston.